IBM's shares plummeted by 23% following a dire profit warning, sending shockwaves through the tech sector. This unprecedented drop raises critical questions about the future of big tech earnings and market stability. Here's a detailed breakdown of today's shocking events. Looking ahead, the market is on high alert for the upcoming earnings reports from major tech companies, scheduled for release in the next few weeks. Investors will scrutinize these reports for any signs of weakness akin to those recently exhibited by IBM. IBM's disappointing results sent shockwaves through the tech sector, raising alarms about the overall health of the industry. This trend has prompted analysts to question whether a broader slowdown is underway, especially as tech companies face increasing competition and evolving consumer preferences. The current bearish tone may compel firms to adjust their forecasts and strategies in response to this unsettling development as they navigate a rapidly changing economic landscape characterized by inflationary pressures and supply chain challenges. Macro data will also be closely monitored. Fresh economic reports and producer inflation data are expected soon. These reports will be crucial in determining whether inflation is indeed cooling or if further rate hikes loom on the horizon, which could exert additional strain on tech stocks. If inflation data disappoints, the potential for continued declines in tech stocks remains high, with the Nasdaq and S&P 500 particularly vulnerable to selling pressure. Analysts suggest that the next few weeks will be critical for the sector's future, as tech companies grapple with rising costs and shifting consumer demand. The tech sector has been a key driver of market growth, and any signs of weakness could have ripple effects throughout the economy, potentially leading to reduced consumer spending and investment. As we assess this uncertain landscape, one pressing question remains: how will tech giants respond to the challenges that lie ahead? Their ability to adapt will be vital in shaping the future trajectory of the industry. The roots of this crash can be traced back to a series of structural challenges and macroeconomic pressures that have been building over time. IBM's decision to pivot heavily towards AI and cloud computing seemed promising, yet the latest profit warning reveals that the transition is fraught with unexpected hurdles. Operating income and margins have not met the expectations set by investors, raising concerns about the company's strategic direction. Compounding these issues, the tech sector has been grappling with macro volatility. Recent surges in oil prices, exacerbated by geopolitical tensions such as U.S. strikes on Iran, have heightened fears of inflation and its potential impact on economic growth. The uncertainty surrounding Federal Reserve policies has added to the trepidation, with Chairman Kevin Warsh indicating a desire to curb inflation while navigating complex signals from the economy. Investors are left guessing about the future trajectory of interest rates. This combination of market uncertainties, coupled with IBM's disappointing news, mirrors previous downturns in tech history, where overhyped growth projections led to market corrections. The tech industry has faced challenges before, but the current convergence of factors creates an especially precarious environment. Investors are increasingly wary, as the optimism surrounding technological innovation is overshadowed by financial reality. The impact of these developments extends beyond IBM, affecting investor sentiment across the entire tech landscape. Companies that rely on robust consumer spending may find themselves under pressure in the coming quarters. Looking ahead, the future of the tech sector hinges on how companies adapt to these evolving challenges. A focus on sustainable growth and realistic projections will be crucial. As firms reassess their strategies in light of these pressures, the success of their adaptations will ultimately determine the trajectory of the industry. IBM's drastic decline is a crucial warning for the technology sector, signaling potential turbulence ahead. The company reported disappointing earnings, raising immediate concerns about the upcoming earnings from other big tech firms like Microsoft, Amazon, and Google. Investors are now left to ponder whether the optimistic projections surrounding AI-driven revenue growth are realistic or overly ambitious. This skepticism is compounded by the sell-off in semiconductor and memory stocks, which signifies a broader retreat from high-growth sectors that have long driven market enthusiasm. Contextually, IBM's struggles reflect a changing landscape in technology, where traditional business models are being challenged by rapid advancements in artificial intelligence and cloud computing. The tech industry had enjoyed a decade of robust growth, fueled by innovations and increased digital adoption. However, companies like IBM are grappling with stagnating sales and fierce competition from more agile players, making it clear that the entire sector faces a reckoning. This shift is particularly significant given that tech stocks have historically been viewed as bellwethers for the overall economy. The ramifications extend well beyond IBM, as the sell-off has exacerbated global recession fears. Investors are pulling back, resulting in significant losses across the tech landscape, with major indices reflecting this downturn. This decline impacts thousands of employees, shareholders, and consumers who rely on technological innovations for everyday conveniences. The tech sector's performance often serves as a barometer for broader economic health, and a downturn here could signify deeper economic troubles on the horizon. Looking ahead, market analysts express concern that each subsequent earnings report may reveal similar weaknesses, further destabilizing investor confidence. For the average person, this situation matters profoundly because it directly correlates with job security, investment portfolios, and the availability of innovative products and services. As the tech sector grapples with potential downturns, the ripple effects may lead to increased unemployment and slower economic growth. In the coming months, stakeholders will be closely monitoring how tech giants adapt to these challenges. The ability of these companies to innovate and pivot successfully will be crucial in restoring investor faith in a rapidly evolving market landscape. On July 16, 2026, IBM stock crashed by a staggering 23% after the company issued a profit warning and lowered its guidance for the upcoming quarters. This announcement signals serious challenges in their transition towards AI and cloud services, which have been touted as the future of tech growth. The news hit Wall Street just as investors were already skittish due to ongoing economic uncertainties, sparking a broader sell-off that affected the entire tech sector. Notably, U.S. chip and memory stocks also faced significant declines, reflecting a troubling signal for an industry that had previously led market gains this year. The sell-off intensified fears of a potential global recession as market sentiment turned decidedly negative, exacerbating the volatility in tech stocks. In total, IBM's market cap loss was approximately $17 billion, a staggering figure that raises alarms among investors and analysts alike. This decline has highlighted the fragility of the tech recovery, as many had believed that the sector was on a solid growth trajectory. The situation is particularly shocking given that just months ago, many tech companies were touting strong growth driven by advancements in AI technologies. However, IBM's unexpected struggles have cast a long shadow over the entire earnings season, leaving investors to question whether the anticipated AI-driven revenue growth is overestimated. The broader implications of this downturn are yet to be fully understood, but it is clear that this moment marks a significant turning point in investor sentiment towards big tech. Analysts are now scrutinizing the business models of other major players, wondering if they too may face similar challenges. The ramifications extend beyond just IBM. They suggest a potential reevaluation of tech stock valuations across the board. Companies may need to adjust their strategies to regain investor trust and demonstrate sustainable growth. Looking ahead, market observers will be closely monitoring IBM's next moves and any further guidance it provides. The company's ability to effectively navigate its transition to AI and cloud services will be critical in determining not only its future, but also the overall health of the tech sector in the coming months. Investors are particularly eager to see if IBM can restore confidence and establish a clearer path toward recovery. As we consider the future of the tech sector, how will companies navigate these challenges, and what impact will it have on their performance? Share your predictions in the comments below and subscribe for daily deep dives into the latest market developments.